So, you're just setting up a business or a side hustle, and you're not sure whether you should be a sole trader or a limited company. No worries. Having done this process a few different times myself, and advised a few others too, in this video, I'm going to talk about why setting up as a limited company is definitely the best choice. And if you're new here, hi, I'm Charles. By day I work at Google helping different businesses to grow, and by night I make YouTube videos just like this one. So welcome to the channel. And don't forget to check out the sister video to this one, which is why setting up as a sole trader may be a better choice. So you can compare and contrast the reasons I give in this video to that one. Just like the sole trader video, I'm going to cover 5 different sections, and we're going to cover liability and legal responsibility, tax, privacy and transparency, salaries, and expenses. Let's get cracking with liability and legal responsibility. So what does it mean to be a limited company? What are the kind of different legal implications that we have? Well, creating a limited company means that you are a director of a business. And the key thing with that is that there is a legal difference between you as an individual and the business. So if someone sues you, the business, they're suing the company and not you individually, which is effectively known as limited liability. However, you may be responsible for some financial and legal obligations, even though you still benefit from limited liability. What it means is that the assets and the liabilities from the company are completely distinct from your personal finances. So the house that you own is completely different to your work laptop, for example. And you can still set up as a limited company as a one-person band. Many people in the UK are one-person limited companies, and in the past the government has even kind of like slightly nudged people to set up their own one-person limited company, if it makes sense, although that didn't necessarily help when they were left out of the coronavirus grants. But the key difference here is that all the profits and losses belong to the company and not you personally, as is the case as a sole trader. So you always have to act on the company's behalf and not your own, which means as a director, you kind of have some legal responsibilities, like filing a yearly annual return for one, as well as doing your annual accounts too. That's the liability side sorted. And the next section we're going to cover is how you pay tax as a limited company and what that kind of means. This is a chunky section, so strap in, but we'll get through it. So for limited companies, it's a fair bit more complicated from a tax perspective, as there's a fair bit more paperwork that you got to do. And you have to pay corporation tax on your profit, and there are time limits and deadlines for this, so you kind of need to know roughly what you're doing. When paying this tax, you also have to submit a company tax return, which details your company's finances for the year. You also have to publish your accounts, register for VAT if your company earns over £85,000 a year, and as a director, you also need to provide HMRC with a self-assessment form of your own income allowances, things like salary, dividends, any other personal income you earn outside of the business, and submit it by the 31st of January every single year. Phew, I can take a breath. This stuff is complicated, so I would definitely recommend getting an accountant in if you decide to make a jump to the limited company. It's what I did, it's many of the people I spoke to did, it's what most of my friends do, and it's something that I would 100% recommend. Check out the links in the description where I'll put a little bit more guidance on some of that more complicated tax information. All right, now that we've got that chunky tax section out of the way, what we also want to know is what kind of information we need to disclose as a company. So let's cover privacy and transparency. As a limited company, you have to provide Companies House, which is like the place in the UK where all the different limited company data is stored, with business records, finance information, details of directors and shareholders. You also need to give them a confirmation statement, which includes some of that information I've just mentioned now, as well as giving some information about anyone who has like a significant control or say in the running of the business. If you don't comply, it could be as serious as Companies House turning around and saying, Charles, we're going to move you from the register and your business is going to legally cease to exist. That's not what we want. Next, let's talk about salary. And to pay yourself as a director of a limited company, you've got to be registered with HMRC if you want to pay yourself via PAYE. And whatever you do, you have to disclose this in your self-assessment form. And depending upon the salary that you give to yourself, and your employees, there are different thresholds in terms of the national insurance that you pay. I'll put a link in the description which will have more information about this. What many people do is pay themselves a salary from their limited company up to the value of your yearly tax-free personal allowance, which is roughly £12,500 a year, and then take the rest in the form of dividends, which are tax-free up to £2,000 per year, and then there's different levels in which you pay tax on the dividends that you take out too. And what dividends are effectively profits from your company's shareholding. So you could also choose to reinvest these into the business, but if you're the only shareholder, in theory, you have the right to take any of the remaining profits that you make as a business for yourself. So yeah, it's really important that you just report the income that you get inaccurately so you don't run into any surprise fines or penalties. So just something to watch out. All right, let's talk expenses. And salaries are just one of the different costs that your business will have among many other different costs. And as a limited company, you're also likely to have more expenses than perhaps you would as a sole trader. And expenses work in a very similar way, whether you're a sole trader or a limited company, in that they realistically have to be for business purposes. So things like a business dinner with a client would count, but going to dinner by yourself just because you forgot to fill the fridge, well, it ain't gonna fly. And you can claim back these expenses after spending it on your own money, so with your own debit or credit card. However, it's just far, far easier if you just get a business account and then just use that business debit or credit card and pay straight away, take a picture of the receipt, and then you're already starting a far, far easier process from an expenses point of view. And don't forget, whether you're a sole trader or you're a limited company, expenses are ultimately business costs, so they're gonna reduce our profit and reduce our tax bill, so keep track of these babies. I'll put some more links in the description of all those different kind of business expenses that you can and you can't claim. So in summary, as a limited company, you're personally protected if things don't work out. However, there is a little bit more red tape to contend with, and investors and banks are definitely going to want to prefer loaning money to people or companies that are limited, and you're also likely to get the tax benefit when you're starting to earn enough money going into that company too. So the real question here is, what if you're currently a sole trader and you're looking at switching to a limited company? At what point should you switch? Well, my rule of thumb here is that once your self-employed profits exceed £25,000 to £30,000 per year, and remember this is profit once you've deducted any expenses, this is not revenue, then you'll probably find that trading as a limited company is probably going to save you some money from a tax perspective. However, if you need to have a business that has limited liability, you don't mind the fact that information is going to be shared publicly on Companies House, and you need the validation that a limited company provides, in theory you could start from a limited company on day one. So I hope this video has helped you think about your options. If you've not watched the sister video to this about why you should set up as a sole trader if you're just starting out, then definitely click on this video and give this a watch, particularly if you're thinking about comparing between starting as a sole trader or a limited company. This is super, super relevant. And otherwise, if you didn't want to watch that video, then please smash the like button and I will see you in the next video. Thanks so much for watching.